So just thinking about that with what is the most important event this week, bar none. I don't care what anyone else says. If they want to talk about the yen or the Fed, it's the Nvidia earnings coming up tomorrow. If you think about Microsoft, Meta, and Nvidia, those three companies have accounted for nearly 60% of the S&P 500's gains year to date. It could be a backbreaker kind of moment for the market where if you see anything other than beating expectations and promising higher growth than what we've already seen, which is fairly astronomical, and you look at various valuation metrics like a price to sales ratio for Apple or an Amazon or Google sitting right around 6 or 7, you go to Nvidia, it's 41. It's outrageous. There's a castle in the sky story that needs to be told here, and it's becoming increasingly difficult to substantiate that, no matter how good the near-term prospects look for a company like Nvidia. So tomorrow after the bell, that's just as important, dare I say more so, than CPI last week, than what we've seen with non-farm payrolls, than what we saw with the January Fed meeting. Unlike those where the market can believe its own narrative, that we can have our rate hikes and have our cake too with higher equity prices, a substantial earnings report that helps shape the AI narrative ultimately could be the determining factor for whether or not we see a correction down towards 48.50 or so in the S&P. And if bond yields ultimately get you a little bit of a bid on a safe haven move here if stocks start coming off the board.
Yeah, I don't think you're going to see a safe haven move in bonds, but what I do think you're going to see is just a bounce. We've had a very an 7 to 8 point decline in the bonds in a cyclical market is a massive size move, and from an historical perspective, and so for that reason, I think the bonds.
It's a $7,000 move. I mean.
Yeah. I don't think you're going to see a flight to quality, but I do think you're going to see, some kind of a cyclical bounce. But getting back to the other part of your discussion, I think there's two important things here. I talked to Tony about this morning, and I think I talked to you a little bit about it last night. Number one, I don't think you're going to see any volatility contraction over the next 2 days because of the Nvidia earnings, because of the Fed, because of whatever else. So there's no chance for volatility contraction in my mind until Thursday. That means for the next 2 days, volatility right now in the futures is up 44 cents. Now I know the S&Ps are down 31 handles, but it's still up 44 cents, which is about 2%. Or actually we're getting close to 3%. Mm-hmm. So I don't think you're going to have any help from volatility. What a lot of traders like Tony and myself is we are much more inclined not to sell them and to actually try to buy something or to roll up puts or do whatever we do when volatility is down and the market is unchanged or the market's down. When we get the VIX trading lower, it is very difficult for the markets to go down, and therefore we tend to adjust our positions accordingly and open positions accordingly. It's hard to get short. It's hard to get short in those markets. When you get volatility on a pretty decent uptick, like, just a nothing morning when vol's up, 3% plus, you all of a sudden start to, you're rolling down calls. You're not nervous at all about getting short, and you're very reluctant to get long. That's one thing. The second thing is that you do have, SMCI kind of showed the way to the upside, and now it is not. It's cleaning up its act a little bit. It's probably getting closer to being more fairly priced at 750 than it was at, 1,050. And so I don't know whether the stock eventually settles in at 500, 700, 800, whatever. It's probably much closer to achieving that settlement level now. But there's other stocks like Nvidia, like AMD, like Microsoft that AMD's had a little bit of a sell-off, but Nvidia's had basically nothing. This is the first day with Nvidia. AMD's down 7, but hold on. Nvidia right now is down 36.
37, yeah.
Yeah, 37. Mm-hmm. That's finally, you're getting a little pressure in Nvidia. Microsoft's down 4. You're finally getting a little pressure in Microsoft. I don't think Microsoft's cheap until it gets under 350. I don't think Nvidia's cheap relative until it gets well under 600, maybe 550. So I think there's a lot of room, which takes us to the next topic, which is Nvidia earnings tomorrow. Last night, I thought you needed good earnings in order for Nvidia to go down. I know that sounds weird, but I felt like if Nvidia opens lower, it will attract buyers. Depends how much lower. If it opens $10, $20, $30, $40 lower, it will attract buyers. It opens $100 lower, it won't attract any buyers. So I think that's going to be the key for Nvidia. If it opens $10 or $15 higher, it will attract sellers, not buyers. So Nvidia to me is, it is the whole play for the week. Nvidia slightly lower will attract buyers, slightly higher will attract sellers. I'm the pure contrarian. Significantly lower will attract sellers, and significantly higher, it definitely will not attract sellers. But if it's just marginally higher, it will attract sellers. That's the way I see it.
Then what are the bounds of those definitions? Just to get on the same page.
Well,
5% to the downside is
the
10%.
I think the expected move is 10%-ish, right, Tony? You said 10%. Mm-hmm. So I think less than 5% on either side, it reverses from whichever way it opens. I think if it gets out over 10 to 20%, which is, you can easily see Nvidia. I mean, don't you think of it like kind of the early stages of, it hasn't had an earnings cycle like Netflix. It hasn't had an earnings cycle like Tesla. It hasn't had those shockers. If they have really...
Well, hold on one second. It was quite a few earnings ago, maybe almost a year ago. It went from like 300 to 380.
Yeah, 380.
Yeah,
right.
380, 370, 380. That's a shocker.
Yeah, it had that. That's true. It was a 20% move. The thing with Nvidia, though, is they have a couple things in their back pocket. They can say they're going to buy stock, which I think is crazy, but they can say it because they're flush with cash. They can also split the stock, which is kind of like to save it. But people will see right through that, I think. They should do it if they have good numbers. They should not do it if they have bad numbers. Cheapest play in Nvidia right now, if you're nervous about the stock at all and you're long the stock, is either to write calls against your position or write call spreads. But I feel like the cheapest way to play the downside in Nvidia, if you want to, is to sell call spreads, and the cheapest way to play the upside is to sell put spreads. I don't think you do anything naked in there. That's just my 2 cents. And I like everything naked. I don't think that's a naked play.
Out here right now, look, Nvidia has seen some fantastic earnings recently. I'm just looking at their financial statement here. Their net margins are up from 11.4% in the third quarter of 2022 to 51%. They made $9.24 billion on $18.12 billion of revenue this most recent quarter. And this has been a very steady uptrend that's seemingly increasing more and more every single quarter. So the expectations are high. The fact is that they continue to beat their earnings estimates, their income estimates, their revenue estimates time and time again. And if that happens here, maybe you get a little bit of a move to the upside where people fade it and say, this is a good place to benchmark and actually just take some profits. People forget that's part of the trading process. There are individuals and investors with different timelines than a trader who don't want to have concentration of certain stocks in their portfolios. Yeah. And so once you hit that threshold, you actually have to sell some, scale back, and diversify. So if you do get a little bit of a rally here, I wouldn't be surprised if it's met with a wave of selling on the other end. But is it a sell-off to fade? Perhaps. I would definitely consider that and look to sell some of those puts on the other end of it. But Tom, I think your assessment, the scenario analysis is perfect there. A little bit of strength, people sell off. A little bit of weakness, people buy it back. Like, oh, this is just a flush room. This is the most you could do with a disappointing earnings report. I'm back in. Anything more than that, you see more of a capitulation. And that's perhaps the trigger then to give us our second half of February weakness here, which, again, comports very neatly with the calendar in a market that many people are saying it is overdone. The technicals are still there, even on a day like today, suggesting that the uptrends remain in place, which puts us tomorrow sitting right at support in the NASDAQ, right at support in the S&P, with Nvidia earnings around the corner. Sometimes it's funny how these two things meet at the crossroads, but that's the most important event of the week, plain and simple, for nearly most everything that's going on right now in this market here.
Yeah, I mean,
and that's the entire macro story, quite frankly, too.
Well, there are some things that are interesting. Like, there are NASDAQ stocks, to me, besides Chinese stocks, which I think are getting really interesting here. But there's other stocks like at 181 or under 181. I kind of like Apple here. In fact, I just sold some puts in there at the 170 level, just because I kind of feel like we're getting to the point where
Tesla down 190 and change.
Well, Tesla I don't like.
Why not?
Because I think it's still got a lot of downside, got a lot of room to go to the downside. I like Apple better here. And I'm selling some puts in Apple just because I need some long deltas. And I think that stock's, oversold relative to some other stocks. But there's one thing I want to go back to the Nvidia discussion. Nvidia was always a huge company and was always followed and all this stuff. But when you cross into uncharted territory. Okay, like in the chip sector, and you get into the, you're all of a sudden, what are they, the third largest company in the world? Or they were 2 days ago. They were bigger than Google. They were bigger than Amazon. I don't know if they are today, but they were 2 days ago. All of a sudden, you have a different level of scrutiny. Okay, when you're kind of like a crappy, not even crappy, but when you're a smaller company, you're like, okay, what do your earnings look like? And then you tell the analysts, and they write it down, and blah blah blah, and nobody really pays you much. Never mind. Once you get up to the top 1, 2, or 3 companies in the world, all of a sudden you've got everybody looking at you through a microscope, and it becomes a very different and much more difficult. It becomes much more difficult to surprise people because you got to be pretty upfront, and you can't push out those kind of fluffy, easy to beat, estimates and all that kind of stuff. So I think Nvidia is kind of they've also set the bar as far as expectations really high. So what's different from Nvidia? What's different from Nvidia today than maybe a year ago or 6 months ago was 6 months ago, I think they could still get away with some stuff that they can't get away with today. And also they have now set the bar for expectations about earnings. I mean, you saw what happened to Netflix when they rolled over earnings wise, stock dropped like 250 points. Now it's back to record highs, but that's what happened. Same thing happened to Meta. They went through a stage where, the stock dropped a few hundred points before it, rallied back up a year later to new highs. Nvidia has not gone through that stage yet. And I just think that there's a lot of potential for that now. That's it.
You talk about how these estimates have gone up. A year ago, the fourth quarter 2022 earnings came in at 88 cents a share. Now the EPS is expected at $4.59. And that's higher than where we were last quarter, which was an estimate of 337 versus an actual 402. So, I mean, the expectations continue to get ratcheted up. And Tom, you bring up a great point about volatility around some of these reports. Actually, something that they teach you in the CFA curriculum is that if you're looking for less volatile earnings releases, you actually should go to the names that are bigger with the higher market caps because they have more coverage. It's those smaller and mid cap names that tend to generate the surprises because you don't have many eyeballs looking on them, and therefore expectations relative to reality can be wildly misplaced due to inaccuracies in data collection. So I think right now Nvidia, this is a very, very high bar. It can be beat. They've been beating it. That said, though, if there is a miss, this is a market that feels tired, and quite frankly, there's a lot of people looking for excuses right now to knock things down a little bit just because of how bonds have moved. They feel like stocks may have been a little bit overvalued at these levels. So second half of February, be open-minded for some more downside. It doesn't mean that this bull market run is over by any stretch of the imagination, though.
I mean, if bonds can drop by, let's see, 7 points let's call it 7.5 points. Let's just say 5%. Okay. From the recent high, not talking about, just the recent high, 125 to 118 or 126 to 118. You're talking about 5% move in bonds. If bonds can move 5%, stocks at record highs can easily move 5%. Right now, we dropped off the recent high we made. We're down 50 handles, a little over 50 handles. We're down just over 1%. I mean, anybody that doesn't think that there's 200 more points in the S&Ps here, it's crazy. I mean, I'm not saying it's going to happen. I'm just saying it could easily happen. And in the NASDAQ, I mean, we just dropped 500 points, which is about 3% off the high. But, that said, how much was the NASDAQ up this year? Wasn't it like 17% or something?
A little bit over, I thought. Mm-hmm.
Wasn't it some crazy number like that? I mean, we could...
NASDAQ started around, let's just call it 17,000, 17,100, and it got as high as 18,100, let's just call it.
That's not.
7% move.
That's 7%.
7%, yeah.
Yeah, that's not. I thought it was higher when we started the year.
Well, it had rallied in October from 14,000 and change. I think it's worth 20% by the end of the year.
Okay.
Yeah.
Anyway, I guess the NASDAQ sold off pretty good the last couple of days, 3%. The S&P is 1%. The Russell, where's the Russell now? I don't even think it's sold off maybe it's 1%. I don't know. I actually don't watch the Russell that closely.
Russell's almost unchanged for the year. Russell started the year somewhere around 2,000 and change, 2,000 and change.
I guess my point is there's the potential here, you know, that they why can't they do a little bit of damage? I don't think anybody trading bonds thought they were getting under 120, and they did. I don't think anybody trading stocks thinks they're getting, you know, much under 5,000. And let's see.
Very good. All right, my friend, listen, I'm going to take a quick 90-second break. Sound good to you? Even the S&P is down 32. A lot to talk about in the market. It's a lot, quite red. SMCI down 56. Nvidia down 36. Adobe down 13 and change. A lot of stocks that we look at, Netflix down 9. AMD down almost 9. Tesla down 7 and change. Coin down 7 and change. Palo Alto, which has earnings, down 5.
Coin is kind of interesting here because isn't Bitcoin still, oh, they sold it off.
They did. It's under 52,000 now. The buckers to the upside. Walmart up 9. Costco up 6. And, of course, gold. We'll take a quick 90-second break and come back. We got more Tasty Live after this with a market measure next. Thank you, Chris.